So basically, what we have been doing since last week was we were discussing about microfinancing models, right? So we have discussed SHD and GLG, where self-help group and joint liability group. So when you come to the self-help group, is basically is about a homogeneous set of people get together and try to develop their financing discipline skills while doing some savings. Against that, the banks can give some money, and in return, that the same money can be used for the different financing purposes among the group. Then come to the JLG. It's a bit advanced, where not many people, like 5 to 6 people, got together and engage, and so they can do different jobs, activities, and the one person can take loan from the bank or the NGO, where like Sarvodaya, and then the rest of the two in a group can guarantee. In case if the borrower is not going to pay, the guarantors have to pay the liabilities. That's how the JLG. Then we move to the Grameen model, which is more kind of famous, which has been the kind of a model introduced to the Dr. Yunus, the Professor Yunus from Bangladesh. And then now we see what is the Grameen model. Yeah, this is the Grameen model, right? Hope you can see. In Grameen model, what happened is it's more like joint liability group, but it's more formal and more acceptable. There you have 5 members from a group. Let's say in a group, you have 5 members, right? And again, they might engage in different business activities, right? They have 5 members, which consist of group. Then 8 groups form a center. Now there is a concept called center. Now there are 5 members in a group. So like that, there may be 8 groups can make a center. Center meets every week. Every week the center can meet. Leaders are chosen by members. Now there may be president, secretary, so kind of a committee is being elected by the members. So regular savings, not compulsory. Loan not linked to the savings. They also can initiate savings from what they earn. But like self-help group, loans are not linked to the savings. Loans to the individual borrowers by microfinancing institutions like joint liability group, again, loans can be individually to the members. And again, in that particular 5-member, 6-member group, they are liable in case if the particular member, the borrower, is not going to pay, the others are responsible. The loan proposals are approved by the center. Like Sarvodaya, what happening? Now, let's say there may be separate groups, and the loan proposals come into the center, which again be formed or elected by the rest of the members, and they will evaluate the particular loan proposal, and approval would be given, and then they can get the money, and they again can utilize, and they can repay. It's more like very organized, professional sort of arrangement. So that's what the Grameen model is all about, and being practiced in many countries, especially in Bangladesh. Now we have so far learned about self-help, joint liability, Grameen model. So Grameen model is very much accepted because it has proven a success among many countries, especially in the Bangladesh, right? Which is again the brainchild of the Professor Yunus, who was the inventor of this microfinancing proposition, right? I mean, that's not a very difficult, but just for your understanding that I am going through each module, right? And then next one is individual lending. This is like If you remember correct, earlier there was a kind of a myth where microfinancing is only for group lending. No, it is not only the group lending. It's an individual lending also. How this happens is like, now when you have the self-help, joint liability, Grameen and all that, there is a point where at a particular level, these individuals are ready to borrow individually because they have financial discipline, they have acquired other soft skills, that they can manage their business their own, right? And they have come to a level where business has acquired some assets, right? So they can now independently run the business without any kind of group support or other support like SME customers. So when they come to that level, then the microfinance institutions or the banks can directly lend to this particular individuals or particular borrower, particular entrepreneur. So proposal originated from the individuals like you and me, like SME customers. You can go to a bank, say, I am so and so, I have come up to this level. This is the particular the loan proposals that I want to take a loan. So appraisal done by microfinancing staff like Sarvodaya, for example, or even a bank can do that, right? So microfinancing arm would evaluate and approve and disperse the particular loan. Generally extended to clients having good record under group model. Right now, remember, now they have acquired a lot of skills, soft skills, financing skills, and everything while they were in the group model. Right, so they have acquired necessary competencies and skills. So that's why they come to this level, and then the bank or the non-financial organization or the microfinancing institution is happy to deal with these people individually. And the loan sizes are a bit high, like ticket size is also high. Cash flows and ability to service the loan is criteria for assessing loan size. What is that? Now, cash flows and ability to service the loan is criteria for assessing loan size. Now, not like the group strength, not like the personal guarantees, not like the the synergies are secondary. Here we talk about, like, we will check whether individually they are capable to service a loan. Individually, the business can generate cash flows. So cash flows and ability to service the loans is criteria for assessing loan size. Collateral also could be sought, because why? Now they are in a level, they have acquired assets, they have some investment towards the business, so they have adequate collateral also. So given the loan size is high, or given you are taking a higher risk on the particular credit, you are in a position to seek or ask for collateral, right? So basically, that's about individual lending. So here we have discussed about 4 methods like self-help, joint liability, Grameen, and individual lending. But when you refer my note or the past papers, or maybe about some kind of detail into the microfinancing, you can see there are so many other models also possible in microfinancing facilities. So that's what I am telling. This is not limited to only 2, 3, or 4 models. There are so many things being practiced and tested, and then so we can read it and we can get some idea. So when we do a kind of past paper, so when we refer the past papers, you can see there are some other models also in the market, right? So you can get an idea. But in case if the examiner wanted us to write a short note on a couple of models, but you need to know at least 2 to 3 models by heart, and you should be able to write at least 3 or 4 lines to support the particular answer, because there were some questions to that effect, right? So any questions from the models? Anything that you need to get further clarified? Any gray areas? Any questions? Any difficulty understanding? Any ambiguity? I don't think, but if you do have anything, you can raise it up while we are in the process when we are discussing the rest of the topics, right? Okay. So having said that, then we will move to the next area, that is like kind of understanding where you start with the SHD, then you have completed with the Grameen model. That's the highest sophisticated model in the group models, right? So you can treat these things, what's like, how the chronology, how the kind of orientation from SHD to the Grameen, right? If you take SHD, it's a primitive model where you try to bring the kind of particular entrepreneurs to a level where to keep them informed, keep them promoted on the financial discipline skills, right? How to do financing, how to do business properly, how to acquire a customer, how to manage the customers. So those things are we call financial discipline skills. So then in SHG level, what happens is savings habit, right? So you try to promote savings among these individuals rather than spending. We will try to advise them, try to promote the savings culture among these individuals. Then stronger group cohesion. So at that level, because there are 10-15 people in a similar type of business activities, then you try to make some team dynamics, group dynamics among the members. So then they know how to live together, how to do business together, how to tolerate the others, and how to cooperate on the other activities. Like, so you try to more or less promote the non-financial skills among the entrepreneurs. Lower interest rates, because the interest rates are again we are against the deposits. The interest rates also comparatively lower when you talk about Grameen to individual levels. Then cover when you are moving to the group model, SHD to LH and the Grameen. Then what happens is have to cover all intermediation costs. Interest rates are higher. Interest rates charged by self-help group to clients are similar. Like now, what happened could be then you go up in the ladder where microfinancing institutions are coming. Then there may be added cost on that. So how to manage it, they are coordinate, and then bit of transaction cost also involved. Like not like a group where nobody will come and intervene you. When come to the next level, like banks or the MFIs are engaged, then the interest rates, the transaction cost, and maybe the credit cost also could go up. Then the interest rates could be a bit high. When come to the Grameen, right, is something where you individually you are able to borrow. So in that sense, savings is not mandatory. Good to have, but not mandatory. Loan dispersed a higher ticket size, right, and individual. Tenor shorter, allowing increased loan size faster. So then it depends on the individual capacity to repay. But if they want 5 days or 7-day loan, yes, we would give a 7 day, because now what could happen is that could be invested on the working capital and then settle regrant, because they have the capacity depending on the business activity. So they their financing requirement could be different from one individual to another, like SME customers, right? So depending on the individual requirements, we may have to approve, and then we have to follow it up as well. So in generally, in microfinancing, interest rates are high compared to other. Now, as per recent circular, now there is a maximum interest rates that they have set is something about 40% or so, but you can't go to that level. But generally, you are not going. But there are some occasions also people, the entrepreneurs are charged that extent, right? Even more than that also. So now actually, the central bank has come up with a maximum interest rates on entrepreneurs, especially who are getting microfinancing loans. That is about 40%, which is again is very high. But that's how the trend is, right? With the new act, actually now they are revisiting. Probably some of these aspects also could be looked into, like maximum interest rates and sort of what are the methods that you can control the recovery, right? Because the people were talking about unethical loan recovery practices. Remember that there were some occasions that some people got suicide, right? Because of this, loans cannot be repaid. So that's basically the way that people are approaching recovering, pushing hard to this recover. So like those are the things that one has to look into, especially in this sector where more are informally into the microfinancing propositions, right? Microfinancing activities, right? So since that though there is an act, but which has not been very much practical and in place in operation, so many things are happening. But what the government is trying to do right now is, now they are trying to revisit the existing 2016 Act, and then they are come up with a new Act, so which will have a more sort of user-friendly Act to support both banks or the non-financial organization and the microfinancing institutions versus the micro entrepreneurs and micro entities. So that's how the present situation on the regulatory perspective. So far that what we have done is we have discussed about microfinancing models up to this level. So if you don't have any questions, we can move. And anything, this is further described about individual or group. I think we have discussed it. So more or less individual attention, right? Individual looking to cash flows. Individually, you try to get some collateral. Monitoring is also individual. And at organization level, you need to have a credit officer who are, thorough with the credit acquisition, credit appraisal techniques. So that's all about kind of, individual versus the group. So then we try to move the Microfinancing Act, because what I wanted to put here, some major areas is basically you may need to memorize some of these things, because we have seen that, examiner has, purposely asked about what are the areas covered under Microfinancing Act number 6 of 2016. Like he has asked to that, the questions has been asked to that extent. So these things that you need to, at least 4 or 5 areas you need to know in case if the particular question has been asked. Major areas like under the Act, it's been told, or it's been said, like how to licensing of companies carrying on microfinancing is very straightforward. But so it talks about, how you, if you want to do a business under microfinancing, then what should be the method of licensing? It has been mentioned in the Act. Business restrictions on licensed microfinancing companies. So it says what you can do, what you can't do. So the functions we'll see in the next slide. So what type of activities you can undertake, what type of activities you cannot undertake. Management, how you undertake, how you run the management of the microfinancing company. Direction and rules governing. There may be rules and regulations also has been set, and if you are running a microfinancing business organization, you need to abide by these rules and regulations. Financial statements. So how you to prepare, how you present, who should audit, what could be the auditing requirements, and everything also will be covered under this Act. Examination and supervision. Now, as per the central bank, there is no particular arm to supervise microfinancing, which has been done under the non-financial organization or under the non-bank supervision division by the central bank. But now going forward, there should be a particular organization, particular department to run, to observe, to manage, monitor this microfinancing organization in Sri Lanka. So like that, there may be cancellation of the license and winding up of licensed microfinancing company. So that's also there. Like in case if they are not running the business properly, so there may be a method, there may be a process to cancel the license, right? That also has been mentioned in the Microfinancing Act. Microfinancing non-governmental organization, right? So microfinancing non-governmental organization is something where in not only the bank, not only the non-financial organizations, NGOs also can run the microfinancing activities. So then how those institutions can run those activities, which has been described under the Act. Principles, standards, guidelines laid down by the board, like there may be ethics that you have to run, principles, standards. So again, has been included in this Act. So basically, there are 10, 12 activities or areas being covered under the Microfinancing Act number 6 of 2016. So what I request you to is, so you need to go through at least 4 or 5 items here and keep memorize in case if the examiner wanted us to write a short note, or there may be some MCQ questions he might ask us where to write at least 2 or 3 areas covered under Microfinancing Act. So you need to write at least 2 or 3 in order to get 2 marks if it is coming under the MCQ or the under first 10 questions. So if it is like a essay type of question, so probably you need to write 4 or 5 areas covered under Microfinancing Act. So since that this is the act has been enforced yet, so he could ask a particular question. It could be a repetitive question, because if you see the last some of the past papers, so where we have found, where we can see same question has been asked once or twice. So only just a kind of, the repetition I can do memorizing. So because we can answer that particular question if it is coming again. So then this is also important. This is where what the microfinancing organization can do, because it covers some areas. That's a one question. Then functions under microfinancing. If you are running a microfinancing organization under particular act, what you can do, what is your functions, what you are allowed to do is basically, this is being the answer, right? So basically, like similar other organization, finance companies or banks, they can provide financial accommodation. So they can give credit facilities to the client without security. Even they can do housing facilities, right? That's the, what we talk about microfinancing. They can give microfinancing loans. That's what the line 1 says. Number 2, micro deposits. If you remember, they can even canvas deposits, except current account. Time and saving deposit, open, maintain, manage savings and other similar deposits, but not the current accounts. They can't operate current or demand deposits, but they can do all other savings and related, accounts, and they can manage that. Third one, provide credit to buy, sell, supply industrial and agricultural inputs. So basically, they can do agricultural lending. They can do housing and other stuffs. They can, accept deposits and all that. Third, so they can do agri-related businesses, because now it's a requirement where the government is also mandated banks to provide at least 10% of their minimum 10% of their portfolio into agri sector. So the microfinancing organizations also are allowed to do lending on agri sector. They can do investments. They can, because there may be some savings from the clients, so they can use that. Let's say the government organization, treasury bills, treasury bonds, EPF, ETF, like this. They can do the investment like other banks also. Storage and safe custody facilities, like they can do maybe pawning, for example, safe custody, or they can even give the custody, what do you call the clients, maybe some kind of some facilities within their premises, and also storages, like, because depending on the requirement, so they also can do a similar type of business. And advisors, like non-financial advisory services, SME center done by other banks, they also can do a non-financial facilities like advisory services. Then customers who hedge various risks related to microfinancing, like risk mitigating instruments. Like if you go higher level instruments, like hedging derivatives, and then options like the main banks do, so they also can do at the micro level some hedging techniques to the microfinancing customers as and when necessary, right? So that's basically sum up with what they can do. So basically what I wanted to discuss here today is with the microfinancing. So we basically learn a kind of maybe a 1 day plus another half an hour about microfinancing. So where we learned about what is microfinancing, why it is important, the definition, what are the the pluses and minuses, who are the organizations who are involved in the microfinancing, and what are the models in microfinancing, and what is the kind of act in the microfinancing. So those were the things that actually we learned during the class. But if you just go through, and my reading materials will take a minute, and so I will go through with you together so that you can see what are the rest of the areas that I have covered in the microfinancing reading material. So give me a minute, so we'll move to that So basically, I just run through this because just wanted to give you an insight to what I have shared. In addition, what I have done in the paper presentation, this is what I have included, right? So it basically discuss about, history, about, what happened and where we started kind of thing, first attempt, second attempt kind like. But most important part here is the third part, draft bill, and the this 2016 the bill that they talk about. And then I think we have discussed about two areas, that is the area coming under the act and the functions of the businesses they are allowed to undertake. So those two are more than enough for exam. Probably they might ask about when the bill passed. So that is 2016 July. So you need to keep that in mind also in case of the MCQs, right? Then definition of the microfinancing, that is also very important. We have defined it in different ways with very detailed description in the presentation. So you need to be thorough with the definition of the microfinancing, because in case of a case study part B questions, so they probably would ask about how to define the microfinancing, right? So you can have your own answer also, while you can take some inputs what we have done in the classrooms, where what is understood by the micro, what is understood by the financing. Financing in two parts, we have financing activities and non-financing activities. So you can collaborate it and give a very good answer. So next slide, actually we discuss about when you are doing the microfinancing, there are 4 areas, like if you remember, empower, sustain, right? So sort of activities. So you can bring that into the description as and when necessary. Then there may be questions to this level, where who is your target market, who is the objectives, right? The 4 objectives that we have said, that just mentioned, even in the slides as I have mentioned, those are the objectives. Target group is basically the people who are below the poverty line, who are mainly the women entrepreneurs, who are having entrepreneurial skills, which they don't have money. So like that, so you can describe the target group also, right? And then objectives. These are the objectives, that there are so many, but you can at least have to pick 3 or 4 in memory, in case if the examiner wanted us to write a short note. Then there were questions to these items. Essential elements on microfinancing. Basically, when you are doing a microfinancing business, right? So you are trying to do some key items, key elements in any model, whatever you do. It's a Grameen to, it's a self-help to, it's a joint liability, whatever. When you are trying to undertake this methodology, when you are trying to undertake this financing, then you basically try to do some steps. So these are some of those things, like teaming, grouping, financial literacy, and so you have identification and providing loans and loan related activities and follow up. So those are something that we do for any loan, but especially for the microfinancing also, you undertake those things also. So sometimes some questions are they are to write 3-4 points under essential elements in microfinancing delivery. That is the answer for that. So you can read them, you can get familiar. In Sri Lanka, this is about generally some stuff about statistics, but I don't think this is being asked, but they might ask about what is the microfinancing, the turnover, right? That is a 60 million per annum. Below, they will talk about microfinancing, and they will talk about maximum interest rate charge, that's about 40%. So those questions could be coming to the could come as some MCQs, right? So when you do past papers, I will share it further. Some MCQs, actually there were so many questions on the microfinancing. So just wanted to tell in terms of microfinancing in Sri Lanka, the possible question could be like definition, interest rates, those things could be the possible questions. Then this one again you can read it, but history I haven't seen any questions coming from that, but it's for your reading. And then this is again they have asked, what are the institutions engaged in microfinance in Sri Lanka? Like licensed commercial bank, licensed specialized bank, right? Finance companies, and then Samudi and other societies, cooperative, NGOs, right? So there are so many organizations involved in that. So probably he might ask questions like, what are the organizations? Write a short note. So at least you need to know one line statement about this organization. Then what are the practices, right? So these are the common practices and concerns, right? When you try to do microfinancing business, so country to country, there may be some concerns like regulation and supervision. So even Sri Lanka also, though there is act, it has not been very much inactive. So the supervision is not so great, regulation is not so great, right? And then there may be some areas where, you know, infrastructure development in terms of microfinancing, right? Because it has not been done, because as we were talking about, why the many banks and institutions are not willing to go to the microfinancing proposition is because of this not adequate infrastructure, because they are scattered everywhere, so unable to, you know, go and capture, monitor kind of thing. So those are some of the things, especially the IT involvement. And then women entrepreneurship is another challenge or the concern, because that it is the fact that, you know, it's a part of the one of the objectives of the microfinancing is to encourage women participation in the business. That's been not easy to be done, because so many other factors has come and operations where, you know, they may not be coming to this thing. So there may be some myths again, the, you know, women come in and they can't do business. So many things are there, kind of a challenges. Then market intervention of government through interest subsidies, because when government comes with, you know, some of the Janasavi and all that, so then microfinancing business may not be viable. So people would think about why we do the microfinancing, because if we are getting something from the government free of charge, right? So then high interest rates, unethical loan recovery practices are some kind of, you know, the concerns, challenges, right, in the microfinancing business, right? So that's what I have given here, in addition to the past paper questions, because these areas, 6 or 7 areas, are very much important for us for exam purposes. So what I am, you know, so much insist on the microfinancing here is because it's very easy question. If you are trying to attempt it, yes, you need to go through the presentation and this reading material and the past papers questions also. If you are able to do it, so obviously you can get 100% marks from the microfinancing, which has been already given, and the questions that we can get. So there is a very, I mean, remote possibility the questions could sit outside what we learn. Only the 3 areas that I mentioned: presentation, reading material, and past papers. So other than that, I haven't seen any questions has come from outside, like SME and all that. We see so many outside questions can come and test us. But in microfinancing, we haven't seen that happening. So I invite you to go through, read it, be familiar, and attempt as the first question, because it's, I mean, it's very easy. It's not difficult, right? So having said that, I'm planning to, you know, wind off the session on microfinancing. Any questions from this area? Anything that you want to get further clarified? Before moving to the rest of the questions, we have planned to do some past paper questions today. Any gray area here? Anything that is not comfortable for the additions, right? No? All clear? Right. If you do have any questions, even as I said, you can ask it whenever we do, even we do other questions also, right? Right. Now again, since that we have done 1, 2, 3, 4, there are 4 areas we have done. So let's see that some of the past paper questions which has been given to us, and then we try to get an idea how we are going to answer. So what should be our learning method, how we are going to get ready with the exam, right? How should I memorize, how should I keep learn on the concepts that we have done. So once we see the past papers and the suggested answers, then you can get an idea what is the method that you need to follow to attempt the past paper questions. Okay, right. Give me a minute, so we'll update. Right. Now I have selected some past paper questions here, and then we try to understand the questions and the particular answer. Especially we can go to the suggested answers, plus you can find out some more answers from the tube. I hope that you can see the screen. Ravin, can you see it clearly?
Yes, sir.
Okay, right. So the question is basically, microfinancing is the main delivery method of development financing in many developing countries through financial inclusion and financial literacy. There are many global organizations are available to provide funding for microfinancing in developing countries. So that basically sums what is microfinancing is. If you remember, there you have financial inclusion and financial literacy. So we'll discuss financial inclusion later under past paper question, but generally financial inclusion is something providing financial products, providing financial accommodations to the clients in a fair and transparent manner with the view to support their sort of objectives, like improving the livelihood, improving the standard of living, the empowering women, like that. So that's what the financial inclusion is. Financial literacy is that what we talk about, non-financial activities, non-financial support, advisory services. So basically, if you remember the microfinancing, that they haven't asked about the definition here, but if they ask a definition, the answer is lying in the question itself, right? So generally what they could ask is, they could first ask about what is microfinancing definition, objectives, target group. අන්න ඒ විදිහට තුනම එකට අහන්නත් පුළුවන්, වෙන වෙනම අහන්නත් පුළුවන්. So the first question is basically explain the objective and the target group. That's what they ask in the part 1 to take 5 marks. So here what you can write here is, if you remember, there were couple of objectives. In the reading materials also I have given 5 or 6 objectives. You can write 3 or 4 objectives here. Then target group also we discussed in the presentation, where it is the people who below the poverty line. It is the people who are having entrepreneurial skills, attitudes, but they don't have adequate financial support, or maybe predominantly women who are engaged in businesses, or the people or the micro entrepreneurs or micro entities in that group, right? The people who are requiring non-financial skills predominantly than the financial requirement are some of the people that we are talking about. So ඒක ඔක්කොම එකතු කරලා තමයි ඔයා මේ target group එක ගැන ලියන්න. Right? So when you see the suggested answer, you can see that he has not written everything. But now you need to have a very solid answer developed. What he could ask is, he could ask the microfinancing definition. That you have a very good answer, because we have done what is micro, what is finance. With examples, you can write, this is microfinancing. Micro is, we have discussed micro entrepreneurs, entities. There are the people who are having skills, excluded population, right? So we have identified some people. That's about micro entities, entrepreneurs. In the same slide, we discussed about, we have defined what is fund, what is non-fund. Micro loans, savings, insurance, remittances. Those are the 4 categories. And then non-financial is about marketing to financing to standard living upgrade to, those are the non-financial advisory support. So you have complete set of data to define the microfinancing. That's one. Then objectives. Even I have mentioned in the slides, there are 4: sustainability, standard of living to empowerment to, like that. There are 4 key 4 items I have discussed. When it comes to the reading materials also, I have listed 6 objectives in the microfinancing that you can write. Target group, again, we spoke about, so you can write that as well. So if the same question repeated, which has been in the practice, so you have to have very good answer to get 5 marks out of that, 5 out of 5. So before looking to the answer, any questions in understanding this question? Or what do you feel? Is it easy if you are ready, or is it difficult? What do you think, Ravi? Is it an easy question if you are ready to answer? Or any ambiguity in the question itself? Or how do you see it? Is easy one, or what do you think?
Question is not easy, but we can answer if we go through the slides.
That's what I'm telling. The question basically, when you say key objectives and the target group. So he has, asked about a point blank, what is target group, what is objectives. But the beauty here is, we know what is objectives, we know what is the target group. And what is missing here is, for the next question, he could ask about define microfinance. For that also we have answered. So but my advice is, as I was telling from the beginning, this area is very straightforward, but only thing is, there is a bit of things to memorize. Keep close learning. So try to do it and then come to the answers, right? So we'll see what basically what the suggested answers are. But when you see the suggested answers, you can see it is not great, right? He has not written so many things. But when you have that your answer ready, you need to write everything. Yeah. Key objectives. He has only maybe basically write maybe 1 line, and target group is on the another line. But for us is, when you say objectives, we have 4 or 5. So at least write 3. Right? We talk about sustainability, empowerment, and then providing the bringing the standard of living to next level, right? So bring them to a contribution to the national economy. So those are some objectives. So you have 3 or 4, at least write 3. If it is a single question, you need to write 4 objectives, because there are 6, right? To provide the poor with much needed capital to start their small scale enterprises, poverty alleviation, participate in the country's economic growth. So there are a couple of here. There are poverty alleviation, country's economic growth, sustainable income, improve the standard of living, promote the women empowerment. There are 5, but here he has write only 2 or 3. But since we know it, and when comes again, so you need to write at least 3 or 4. Then target group, mainly unbankable, poor, low income, and micro enterprises. That is also correct, but you can write, instead of micro enterprises, you can say micro enterprises and micro entrepreneurs. Both we are planning to give. That's right. Then unbankable poor, or the people who are excluded from the traditional banking lines. That is also explainable. Then low income households, that's all good, or the people who are below the poverty line, or the people who are identified as poor, right? The low income group, that's fine. And then what you can write here is the identified women entrepreneurs also, that you can include, because in the microfinancing, basically one of the target group is the women entrepreneurs. What is missing here is, could be the people who are having some entrepreneurial skills. That also we can include, because they don't have money, but they have skills and attitudes, so aptitudes toward the microfinancing propositions. Okay, right. So any questions on the particular answer? Any gray areas? Anything you can add? Anything should I explain a bit? Because what I want is, I want to take, you 100%, even more than that on these areas, because very easy, right? You can get maximum marks of this, because since I am, marking papers for the last 10 years, I have seen whoever who is attempted the microfinancing is get at least 17 out of 20. It's minimum the mark that they are getting it, because the issue here is nothing coming from outside. It's all from the textbooks, what we learn. And the beauty is there are so many past paper questions being repeated. Andrew, anything from you? You have raised your hand. Any question?
Yes, sir. One thing,
Yeah,
sir. Just want to know when answering up, when you say briefly, if we write it on point form, will it be an issue for
that
us?
is, that's more than enough. When you say whether they discuss briefly, explain or whatever, now we are supposed to answer question in point form. So here actually in these suggested answers, he has given several points. Provide poor with much needed capital to start the elevation of poverty, it should be alleviation of poverty, and its participate country's economic growth, like that. 1, 2, 3, 4, 5, that is very much fine. Then Andrew, we can understand, in fact, you have not written 1 or 2, you have written a couple of points also.
Yeah,
very
so
good.
maximum, sir, if you write 5 points, it will be kept enough to get other
more
points?
than enough, because in this question, he has asked both, no, objectives and target group, no. So even 3 would do here, because it's 50-50. Target group also you have to write something. Microfinancing objectives, you have to write something. But if the question is for 1, you write to at least write 4, right? So it's objectives, since we know 6. But if your time permits, if you can write 5, and no harm, right? But in case to get the 5 marks, at least you have to write 4 items, 4 lines. Target groups, probably you might not have to write 4 lines, which is maybe obviously maybe 3 or whatever. Then write it 3. If it is more, then write it 4. But my this thing is, yes, the point form, yes, that would very much appreciated. Then you also know you are very comfortable, right? So when you are writing the answer, for example, I'll also tell you a tip here. Let's say now we are starting writing, right? When question number 5 or whatever, part 1, objectives, then some below you say target group. Under objective, you have write 1, 2, and you keep 3 and 4 blank. Target group 1, 2, 3 blank. You go to some other question. Probably you might not, the answer is not coming to your mind. But in a one page that you see, you can put a mark here which you have not completed. Then go back and come here. You know exactly what you need to write. No need to read it again. But if you put a text, what happened is you need to read it, what I have mentioned. But here you say point 1, point 2, point 3, and 4 missing under objectives. You know exactly that I have to write 2 objectives here. Come to target group, I have mentioned target group features 1, 2. Yes, I need to put something. Target group, you can underline, point 3 missing. Objectives, point 2, 2 points missing. That's the way that you need to be ready. If you are writing the text, what happened here, you need to read it again. What I have mentioned. Or if I am write it again, then we have the repetition. But when you say point form, 1, 2, 3, 4, because it's a full answer, I have to write 4. Only I have written 2. I need to write another 2. You know it. It's a half answer. 3 would do. I have write 1. I have written 1 and 2. 3 missing. I need to bring 1. Probably when you are doing some other questions, you know what I missed this objective, microfinancing. Yes, come again. Yeah. Maybe promoting women entrepreneurship. That could be objective. You get the full marks. That's the approach. From day 1, be ready with that. You need to plan it and write it. Generally, I advise like answer planning. So answer planning is what you need to say. You read the question, what exactly he described. Then read the requirements. Here, maybe microfinancing, objectives, target group, financial inclusions, like that. So in one page, you can say microfinancing question. What is the area? You need to say 1, objectives, target group, financial inclusion, blah, blah. So 5 or 6 things that you need to be ready with the answer. So answer plan 1, 2, 3, 4, because it has been given under 1, say objectives, target group, 2, inclusion, 3, this answer plan. Then you have the answers that I have mentioned. So when the examiner sees you have answer plan, you have very methodical answering in point form, part 1, part 2, like that you're going. So probably he might give at least 1 more marks in case in emergency. I must say that if you in a die-hard situation that you have scored some 43 instead of 45, so probably he might give another 2 marks, because the way that you have presented, those things also required to pass, to appraise the examiner. I must say that it's not always required, but good that if you ready with that method, and then you are very comfortable, right? So when you know that I have attempted the microfinancing question, I have done the answer plan, what I missed is this area, so I have completed this. So when you complete the question, you know exactly how much you have scored. So you are very comfortable, right? Out of now, you can't score maybe 18, but you know I have scored 15. So 15, then you think about 45 marks. That's the first hurdle. Only 30 marks I have to score. I have 10 MCQ questions. If I do correct 6, I have get 12. So then another 18 marks. I have 3 questions to get 18. Means each question I need to score only 6. Right? 6 into 3, 18. 6 means there are 4 areas, even 1.5 points out of 5 make me to the first hurdle. That's how you reduce your exam pressure also. Very easily you can do, because those the minor matters will make a bigger impact on your exam situation. Though we talk about 3.5 hours and all that, so we were very much ready, but that doesn't bring you to the first hurdle, to second hurdle and third hurdle. How you manage your pressure during that 3.5 or 3 and 15 minutes will make you whether you get credit, whatever distinction, or just pass, or even the fail. So my advice is be as much as prepare before going to the exam. The preparation also not by heart. Don't do that. Try as much as possible go with the models. That's one. If you are unable to go with the models, because some areas like here there are no models, but you need to develop answer plans and then organize the way you present the answer. Presentation is very key. So at the end of the session, so I will do a kind of a revision on these all areas. Then I will show you what exactly you have to do before exams on preparation as a model. Like here, I'll tell you what you can do in this microfinancing is you can have maybe a major circle, a central circle of microfinancing. Then you have sub circles, maybe 8 or 9 sub circle outside that. Means each circle would tell you what you need to learn. First one could be definition. Second one could be objectives. Third one could be target market. Fourth one could be models. Then fifth one could be microfinancing organizations. Sixth one could be microfinancing act, functions, areas. Then could be challenges. Then could be microfinancing trends. Or the next one could be concerns microfinancing. They're like what we have discussed. So then only thing before the exams and you need to go is there is one paper which is for the microfinancing. Then there are sub circles about 8 or 9 or 10 areas that you need to be thorough. When you see these models, 1, 2, 3, 4, 5, 6, I know what is one or two lines, I know. Definition, I know. If miss, just go and see, be thorough with that. That only microfinancing, one slide. SME, similar you can have. Introduction to project, similar you can have. I will give everything at the end of the session, but right now you can start it. Then go to the break even. There are 6 areas. Working capital, 6 areas. Project financing, non-financial tools, like everything you can have a model. Very like maybe out of 12 or 13 areas that we are planning to discuss. So before exams, we have only 12 or 13 A4 sheets. Each sheets will tell what microfinancing and then SME, like that. When you go to the microfinancing, there are 8 areas that you need to be thorough. 8, let's say, objectives. When you talk about the objectives, think what are the objectives? 1, 2, 3, 4. Should I know? Shouldn't I know? If I didn't know, just went back and come and get brushed up. That's then only 12 or 13 papers. So if something missing, you can go and always come back, because that's how you come and bring your peak before the exam. So then it's very easy. In case if you microfinance, you remember, yeah, this is second or third A4 paper. Models are there, 1, 2, 3, 4. So you can memorize it because it is coming as a model. So those are little things. Yes, you need to do it. Otherwise, you can do like traditionally what we have been doing this, past paper, lecture, PowerPoint, and the reading materials to so all that, and then go to the paper. Also, you write your traditional way of writing. So don't do it. Make a change this time. It's not only for the development financing. You can do for other papers also. Other papers is much better. Like, if you do marketing, if you do financial management and all that. So it are very hard, difficult subject. This is very easy subject because I am telling easy. The pass rates are anyway more than 70 or 80, in given time. Even last time, I think I marked about 250 odd papers, but not less than 20-25 got D pass. All got at least S or more. Even there were 5-6 on distinctions also. Means it's easy. But though it is easy or difficult, but what we need to is preparation is key. Don't take it easy. So think if it is easy that you could have easily scored S pass, why not you go for the C pass? Why not you go the B pass? Why not you go for the A pass? So that's the ultimate, the thing you can offer. So these are some of the tips, because I might, tell them time to time when we discuss, but my invitation to you is have a own answer plan, which is what you call familiar to you. Not because I am telling, not because someone else telling. Have your own answer plan. Have your own preparations. Have your own methodologies. Then try it. I make 200% guarantee you will be succeeded. And because many students who practice that sort of models with me, have later told me that after 15 attempts they got through. Like, I didn't do nothing, just a kind of the same thing which I have been doing with you, and I did with them. Only I advise them to change the method, change the writing style, change the presentation, change the method of study. That will work. That will reduce your pressure to 100 to negative. Do it. Start with the microfinancing and see how could be the results. It's great, because so many things would come into your mind, because your mind is not free of stress. Microfinance, you have some structures, you have some models, this, that, and then even you put it blank and go to the SME question, then you come back and you know exactly what I have not written. This is only that I should worry. If you put it right up, then you don't know what you have written and what is missing. Probably you might have repeated the same thing with the examiner, then understood that you haven't done any value addition. Though you think you have written half a page, you may get only 2 marks out of 5. Whereas the other person who written 1, 2, 3, 4, straightforward within a minute, get 5 marks. So that's a difference that we should make. Hope you understand. Right. Anything you can, question me. And if you want further, I will explain happily. Then they ask about financial inclusion. This is the first time we are hearing this, because in the question itself, they talk about financial inclusion. What is financial inclusion? If you see this process of ensuring access to appropriate financial products and services needed by vulnerable groups such as weaker section and low-income groups, affordable cost in and fair and transparent manner by mainstream financial institutions, right? So this is the definition. As I told you, anybody can memorize this definition. There is no point. So memorizing is not a great thing, but try to scale down or try to see what are the key areas in this definition. Then it is easy for you to keep this in your mind. Now, financial inclusion is a new word. That's fine. But what exactly in this statement? There are 4 key items. You can break it down. What is appropriate products and services? So that's one. This is anyway financial inclusion. You can write, put everything icing and all that later. The process of ensuring and all that you can find. But appropriate financial product and services is one. Right? That's one. Appropriate financial products and services, one. Number 2, under the financial inclusion, what we offer. What question is there? Financial products and services. Like microfinancing also same, no? One. Then to whom? That's it. Part 2. Weaker section, poor households, vulnerable groups, and so many things you can mention. That's what, again, a microfinancing definition. To whom? Vulnerable groups, weaker section of the economy, or maybe poor household, people under the below the poverty line. There are so many things in the commentary. So first one, what, who, then how. Affordable cost in fair and transparent. The cost should be affordable and it's transparent. How we are going to do? Affordability and transparency is that you need to maintain. That how. Then by whom? Mainstream financial institutions. That is not only financial institutions, which are both financial, non-financial organizations. So those are the 4. What, to whom, how, and by who. Those are the 4 things. So if you think in that way, isn't it very easy to get this memorized? Financial product and services to weaker or poor households by financial and non-financial organization in affordable and transparent manner. Basically, by whom, to whom, what, and how. That's it. That's all about financial inclusion. කොහෙදි කොතනදී ආවත් ඔච්චරයි වගේ තියෙන්නේ. මොනවද ඔයාලා දෙන්නේ? කාටද දෙන්නේ? කවුද දෙන්නේ? කොහොමද දෙන්නේ? See, when you put those into, very easy. Right? Even now, when you are trying to define financial inclusion, it's a small scale circle. What, to whom, by whom, how. So when you say what, products and services, by whom, financial and financial organization, to whom, poor households, transparency, and affordability. That's it. So that is how you need to prepare. Because this could come to, again, maybe MCQ, again, essay question, but answer does not change. But you can put some value addition. Once you know the base, then you can say appropriate finance products like maybe microloans, advisory services, you can put an icing on that. Then say vulnerable groups, poor households, people below the poverty line, like maybe micro entrepreneurs and micro enterprises. You put the icing there. Affordable cost and transparent manner. So it's something about low interest rates or concessionary interest rates in a fair manner. Mainstream financial organizations like banks, non-financial organizations, NGOs, cooperative societies. See, you go to the next level also, because when you are comfortable with the first one, you go to the next circle. You put some icing on that. When you say financial inclusion 1, 2, 3, 4, and with these things as an added answer, then examiner knows it. This is a general answer by student. This is the expert answer by another student. So he obviously give marks, not only the 5 marks here. See, he keep the method of answering for other some questions also. So probably there is a bit of leniency towards you. That's how you buy the examiner. I must say these are the things, examination tips, I must say. Right? Anybody, can do, memorize and come, but, you should be smart. Like not a hard method of writing. Smart method of attempting questions. This is how you need to be practiced wherever, not only exam. Even the organization, what happened is there are some hard workers and smart workers, no? So every time the smart workers get benefited, right? they get, you know, identified, right? So why? The hard, yes, they do everything possible, but they are not, you know, come to the limelight. Why? They are not smart. But being smart, you do hard work also, but to the extent as required. Not you are not overstepping. You know, you are not going to, I mean, too much work. But as per the requirement, what is expected from your boss, that you give it the, you know, adequate, even more than that, to the point. Or you try to do everything and you try to, you know, win your boss. Probably it might not. It's too much of information, not focus. Right? When you put everything in a way that it's understandable, a presentable manner, in a more user-friendly manner, you get more points, more acceptance. That's in practical life also. But in exam, yes, you need to do that. Right? Any questions? Anything that you need to get it clear? Because we have done 2 questions, 2 sub-questions. I took some time because I wanted, you know, to approach it. I need to change your thinking pattern, right? You know, brainstorm it, like, because you need to change it from, I mean, whatever you have been right now doing, you need to change the style. I mean, you need not to do what I mentioned, but you change your approach, plan it, present it. You have to have own method better than what I mentioned, but, you know, try to do something from the scratch. Right? Maybe you can, you know, think about the other methods. Could be much effective to put everything in your mind and then you present it. Even after the exam, so these things would valid. These to be important because then you have very little, 12 slides, 12 A4 papers. That's a development financing. So, you know, what is development financing? This is only these 12 A4 sheets. Somebody would be wonder, but no, it's up to you, right? Because you know, when you come to the micro, you come here. So everything in this sheet. Something challenges, if not comfortable, go to the Google and get answer. Maybe future developments, current trends, go to the current trends microfinancing because it is missing here. Google will, you know, tell everything. Take 3-4 points relevant to our context, relevant to our organization, then you can go and anyway present to your bosses. Why? Because we have the framework with you. That's it. Hope it is clear. Financial inclusion, objectives, definition, target market. Then how the microfinancing institution differ from conventional banks, other lending institutions. So that is, again, is a very repetitive type of question. We have seen it many a times. Any thoughts? What do you think? How are you going to answer that question? Then think about what is microfinancing. What is the proposition? What is the delivery method? So what the structure of microfinancing institutions? What basically they are doing? Then you can think about. Then you think about what the major banks does, right? Whether they have access, whether they have sort of one-to-one level, whether they do individual value addition to microfinance customers, right? So probably what is their target market? Majority is like SME and above customers, very less on the microfinancing. Why? So think in that way. Then probably many things to come to your mind, right? If you see the answer, this is one basically the difference. Assess entrepreneurial skills of the poor. Generally, MFIs are there to assess the skill, their capacity of the poor households because they don't have adequate money. They don't, you know, have the soft skills developed like SMEs and high-end clients. They have their skill level, their willingness, entrepreneurship. So you need to assess that first. Then only, you know, you start with teaming, the group dynamics and all that. Basic financial literacy. Because if you take SME and type of SME centers, you are not given the basic. You give some advanced knowledge because they have the basic. They know how to do business, you know how to manage financials, how to do employee motivation, so they know it to some extent. But you know, to fine tune in terms of SME and higher level. But if you come to the micro, what happened is they even don't know their basic financial literacy. They don't know how to bookkeeping, to marketing, to win the customer, to saving, to right, and even how to operate an account. They don't know. So then that part is basically done by the MFIs. Then you talk about teaming, small loans, saving habits, right? Right. Those are the initial steps. But bigger banks, they are not doing this. They don't want to do, promote the saving culture. They might put a condition and say you have to route the turnover, you have to have mandatory saving build up. I mean, that's what the loan condition at a higher level. But smaller level, you need to tell them what is the savings, how do you going to do the savings, daily savings, the importance of the savings, right? And the culture to be promoted. So that's what they do. Higher interest rates in terms of micro enterprises and entrepreneurs, because we perceive higher risk. There's a transaction cost is also high. Then we charge higher interest rates, presuming the higher risk. And then the last one is not exactly relevant, but anyway, small institutions or maybe society-based non-profit organizations engage in lending. So that's something about the structure or the model that they are talking about, structural institutional level that they are mentioning. But again, you can, I think it's not exactly relevant how the, other lending to micro organizations are, different. But also you can mention as introductory comments, because small institutions, cooperative societies, society-based NGOs, NPOs are engaged in microfinancing proposition, microfinancing delivery. Any other things that you come across to mind? How they differ? How they differ? They are more into manual, right? Manual interventions to customers. Because if you take microfinancing, so they are located in rural areas. They are located among these communities. So they are basically, dealing with one-to-one manually, promoting group dynamics, team dynamics. But if you take bigger clients, so in bigger organizations, they are not going to that level through maybe automation, through this ICT techniques, maybe like portfolio type of level, customer level, but they are do at a higher level. They are not, very much going to that ground level and monitor, observe, and those things are not happening at the top level, right? So other than that, anything come to your mind? Any idea? Nothing? Okay. Last part. Why is it necessary for microfinancing institutions to provide financial literacy? Because the question whole itself about financial inclusion and financial literacy, the sub questions also, aim into that. I mean, when you say that provide financial literacy, it is not only for microfinancing customers. Even for SME customers is common. But the next time the question could be, why is it necessary for clients or maybe SME clients to provide financial literacy? That could be a next question, for example. So maybe the answer does not change much, but only thing is you need to be prepared before the examiner put the question to us, because he has given this as at the microfinancing level. Anytime he can change the question and ask about what could be the SME advantages giving financial literacy. Most are common, right? If you take here, first one, if you take microfinancing perspective, step for clients toward financial inclusion, because financial inclusion is nothing but providing financial assets and liabilities, product and services in transparent, cost affordable manner to like small, whatever poor household by this organization. But when you say, when you're providing this financial inclusion, then the financial literacy is part of that. Why? Because in order to do that, these clients to be financial literate. Otherwise, you can't do this transparent manner or affordability, right? Cost. And so managing you can't. Because then if they are, doing the same thing repetitively, not paying, putting everything in one place and not servicing, right? And not adhering to whatever terms and conditions, then you can't do this financial inclusion exercise further. Then a step for clients toward financial inclusion is one of the objectives. Why that we need to promote the literacy among these, financial discipline among these clients. That's one. Move away SME from money lenders or microfinancing SME sector for money lenders. But if you do a regular lending, if you are trained, if you inculcate the right techniques, principles, ideas on these clients, then they won't go to the money lenders because it's a costly exercise. So you can bring back to the mainstream banking channel. So that's number 2. To sell their product and services easily. What it means? Because if you promote soft skills, literacy skills, then they know how to market themselves. Then they know how to market their product and services. Then they know how to negotiate with the prospective buyers. So sell products easily, make more margins to the business. Healthy deposit and loan portfolios. When you promote then savings, repayment, their loan portfolio maintenance, then what happens? Then they know what is banking, why we need to do savings, and why we need to repay. Because then you can tell, let's say we give a loan, if you pay timely, only we can give another loan to somebody else. Right? So if you are not going to pay, so there is additional cost we need income on you and on the system as well. So when you tell those things, the steps, the clients understand. I can take loan, I have to pay them regularly. Then only I can get another loan, which in turn help me in the organization, society. So that's what the literacy is all about. Reduce delinquent loans, reduce non-performing assets. Right? So that also can be done. Third, use technology to minimize the admin cost of the MFI. So when you try to impart the knowledge on financial discipline, literacy, then you can increase the level of negotiation, transaction, association, and everything can be the next level. So we are technological support. Instead of manually collecting, now you can introduce smart cards, credit cards, like paying instruments like you pay, whatever, so many things. So you can bring them to next level. Now they know what is all about, how to do transaction through internet, e-commerce, through these platforms. Then what happened? Transaction cost come down. So you can offer at a lower cost. Monitoring is easy. Everything is now systemized. You can locate them centrally. Through a GPS, you know where that they are operating and what they are, and everything is possible. That many developed countries are using these technologies. So basically, these are some of the things that you can fight for. Why we need to provide financial literacy. Hope you understand this question, answer as well. Right. So this is a very easy question. And again, very simple answers, but very fundamental. Basics. Right? He has not asked very different or difficult areas, but fundamental. But see that how far examiner can go to the fundamentals and make you to answer. So 20 marks question, nothing very serious. Financial literacy, financial inclusion, objectives, target market, and some organization references. That's what he has asked me. So, but Do you think that you are in a position to get maximum marks out for this question? How many marks if you think that you can get? Say, if you study well, generally. How do you think? How much you think? Ravin, Samindri, Shashika, what do you think? Lavan, once you do your homework, how much you expect you can score? Andrew? Who thinks that you can score more than 15? Ravin, what do you think? Can you score around 15?
Around 75%. 75%.
Very good. Samindri, Shashika, Andrew, what do you think? Will you be able to make a good, impact? Yeah, very good. So start 15 is very great. I think obviously you can go 18 or more. Yeah, Andrew, anything to?
Yes, sir, we can go for 15 easily.
Yeah, yes, that's I mean. Only I invite you to change the pattern, answer plan, approach, right? Get the question, read it carefully, see what is expected by the examiner. If time permits, if you are happy, have your answer plan in before starting the question. Go to the question, sub-classify, put different areas, write as a point form, right? So everything do possible. So means, the presentation itself bring you at least 3 to 4 marks up against the competitors, against the rest of the students. It's guaranteed. Try it wherever possible, not for all questions. Probably SME to project financing and microfinancing, some essay questions, they are coming. Essay types, you can start and do. See, my advice, my invitation is now, when you finish the class, take this question, see the question, answer, read it, no problem. Read it, look at the papers, look at the tunes, and write it your own. See whether you can do that answer plan. You can do this, sketches. You can write this answer in your way. Do it, because just don't read the question, read the suggested answers. Don't happy at that level, because we have enough time. Probably examination would be like November or more now, even beyond December. So we have enough time, right? Take an effort. Maybe per week you can attempt 2 or 3 questions. That's more than enough. Take one microfinancing question and see what are the areas the examiner has tested us on. Whatever we have done so far, and then have your own answer ready. Write it, and write it once, twice, thrice, until you are satisfied. You are happy with your definition. You're happy with your financial inclusion. You're happy with your financial literacy. Then right, I am happy. Anything is like a bonus. It's a very good answer. 5 out of 5. You can even write for 7 marks. Obviously, you get the 5 marks, right? That's how your plan is, right? Because since these are very important, not only for this paper, for other papers also, since we have time, try to take a challenge. Try to do something differently for this exam, right? And see what is your results. I know for sure that you would be, anyway, you would get through the development financing paper going by, the historical data. But I invite you to say, if you are planning to take a credit pass, why not you go for the B pass? Why not you go for the A pass? And do an effort on that. Okay, let's move on. The next question is, right. Question is about introduction and project lending. So we are trying to learn some more on later also, but given what we have learned so far, let's see, we will be able to attempt this question. Project lending based on the viability of each project or venture to ensure that the project will generate sufficient return for the investment made on such venture. However, lending to some sectors of the economy is essential for a developing country Therefore, in many developing countries, mandated lending schemes are implemented to encourage lending activities to such sectors. Through such schemes have inherent disadvantages. A similar scheme also implemented banks in Sri Lanka by imposing minimum sector exposure limits on their credit portfolio. So it's basically sums what exactly the policy level initiatives taken by the government and what could be the approach towards the project infrastructure sector. The last line is basically it's a minimum sector exposure. That's about agree. So whether it's right or wrong. So there may be arguments pro and cons, but that's the kind of the government initiatives we have taken. So answer the question one is briefly explain the project lending at it's necessary in a developing economy, right? Right. I think this is the kind of answer. Again, you can write this as a point form. I think the advice is it's better because then you can write different points, right? Part one is the project lending. You need to define, and then part two is why it is important in developing economy. I mean, if it is SME, it's a project, it's a microfinancing, what exactly the support. So තුනටම common උත්තරයක් අපි ගාව තියෙනවා. ඉතින් එතකොට අපිට ඒක මෙතන ලියන එක තමයි කරන්න තියෙන්නේ. Right? But in terms of lending definition, again we know what is project financing, project lending, infrastructure financing. So we have identified 3 or 4 points in a slide. So ඒ ටිකත් ඔයාලට මෙතන ලියන්න පුළුවන් 1 2 3 4 කියලා ලියන්නත් පුළුවන් because or if it is definitions you can write it in a essay type of answer. That's also correct, but it's up to you. But I prefer it is like if you writing a 1 2 3 4 because it's 4 different points in defining. See how he has done. It's a method of funding in which the lender looks primarily to the revenue or cash flow generated by the single project as a source of repayment and project assets, rights and interest as security or collateral for the exposure. Play an important role in the developing economy as it is usually financing large, complex, expensive installation that might include, for example, power plants, chemical, transportation, infrastructure, environment and development infrastructure, right? How do you see this answer? Any thoughts? First, he defined this thing. Second, he mentioned about the imports. Any thoughts? If you are examiner, are you willing to give 5 marks for this question? Answer. Lavan, Samindri, Ravi, how do you think? ඔයා examiner නම් ඔයා කැමතිද ලකුණු 5 5 මේකට දෙන්න? එහෙම නැත්නම් you see some more to be added here. You are fresh from the learning, no? You have just learned the concept maybe last week or before that. ඔයගොල්ලෝ හිතන්නේ මොකද්ද? Shashika, Charindu, Ravan, Andrew, Ravi. Are you happy or do we need, can we write more on this? Ravi, anything to add here?
It covers everything, sir.
Covers everything, okay. Andrew?
So because it covers, because the finally it elaborates that for example the power plants which gives an something adding to the GDP.
Right, very good point.
Because of that, it's covering everything.
Okay. What others think? Can we write the answer more precisely than what he has mentioned? Or is it enough? Yeah, Samindri, yes, project financing is not limited to large scale. Means that development financing, yes, could be other than the project financing and housing and agri would come. But in say project financing, to some extent, we need to agree on infrastructure projects like, yeah, these bigger projects. So that is correct, Samindri. If you take first one, and if you go back to my presentation also, so we include about smaller projects. Yeah, smaller projects also could possible. That's about SME, even the corporate type of that. Yes, you can say this is a target market could be, you can mention. If you take the first part, they describe the project lending, which lender looks primarily to the revenues or the cash flow generated by the single. That's fine. So we have mentioned the only and the input that we can mention here is the bank primarily look into the cash flows of the particular project. What cash flows? It's projected cash flows, future cash flows. That you need to include specifically, because current cash flows, if you take day-to-day cash flows, is we take as cash flow based lending, but more or less working capital financing. So project lending, mainly we can mention the primary to revenues cash flows, but generated by the project in future. So projected cash flows, future cash flows, that we need to bring here as a describing point. That's correct. Number two, he spoke about project assets as a collateral. That's also two. Number three could be, what we can bring here is, if you remember in our description, we talk about in project financing, we more or less look into the strength of the cash flows instead of balance sheet financing. That also you can bring here, because balance sheet financing is basically applicable to asset financing or cash flow financing, working capital financing. But here we are predominantly dependent on customers' cash flows, project cash flows, than the balance sheet strength. That's another point you can bring. Another one you can need, project financing, project lending is exclusively for the projects undertaken by SME type of customers, corporate type customers, etc. Even the loan syndications. So you mentioned about the target markets is another point. Or you can mention is for fixed capital as well as working capital for the projects. That is also you can include, because I just want to bring your attention is you can expand the answer more what he has mentioned. Here he has mentioned only two aspects, that's about the cash flows and the security. But you can elaborate it further, right? Because like Ravin mentioned, you can bring some examples like this, power plants, chemical processing are much relevant to the first part, not the second part, right? Like examples, infrastructure projects such as chemical plants, transportation, and like that. So when you write in that way, there may be 5 points that we have addressed here. Suppose examiner wanted us to write project lending only, explain the project lending, infrastructure financing, project financing, then you need to write 4 points minimum. So here he has written 2 and probably we can get marks, but I prefer at least you need to write another point which is different to these 2. Like we mentioned 3 about balance sheet financing is not relevant here. Future cash flows, working capital, and the capex on projects, right?
So you can bring those things plus the example here. So then you can get maximum marks for that type of a question. When go to the part 2, he mentioned about developing economy. That's true. But also see to get some inputs on the importance of project financing to economy, importance of SME financing to the economy, importance of the SME microfinance to the economy, like support to GDP as Ravin mentioned, to support the economic growth, to support the regional development, to support the income distribution, to support to reduce the balance of payment, to support the to bring rare expertise, technical know-how from other countries. There are so many things you can mention, right? So you need to include that for the part 2, which he has missed here. Only one point with some kind of examples he missed included, but there are so many other things that you can mention. The project lending is a supporting tool to develop economy. What are the things that we can do for development of economy? GDP to employment to balance of payment to export financing to regional development to it could support to the higher bigger organization, bigger manufacturing companies. I mean, there are a lot of things that you can include here. දැන් අපි ඒ වගේ තමයි මේ question එක දිහා බලන්න ඕනේ. දැන් that's what I am telling. When you refer the question and when you refer the suggested answers, you sometimes get misled. මොකද examiner වෙනම කියනවා these are only suggested answers, not exactly is sufficient to cover your answer. So means that you can get a idea, get a base, but it's not sufficient, or you can further improve. That's the most important thing, because I just want to take that comfort out from you. If you think that suggested answers are enough, no, it is not, because the examiner might give this to us before marking the paper. So we are not limiting to this when marking the question. Suppose if the student has written something different to what he has mentioned, but if it is correct, then we need to do full marks to the student. Though it is not mentioned here. What Ravin mentioned is because the GDP contribution is indirectly mentioned, but not directly. But if the student mentioned about GDP support, economic growth, economic development, then we need to give full marks. It is missing here. You getting my point, right? So when it comes to you, think from the scratch. Here he asked about project definition, development of economy. Development economy not only coming from project financing. It could come from SME banking, it could come from microfinancing. Same answer, but you need to tweak it to suit to the project financing here. Then part 1, project lending, we learned through a slide. Project lending or infrastructure financing is financing industrial or related project. That's one. Maybe capex, working capital financing of the project. 2, it's not dependent on the balance sheet, it's dependent on the cash flows. Future sources of repayment is forecast of the future cash flows. As a collateral, we are getting project assets, terms and conditions, contracts as collateral. The last one, if you remember correct, in case if the project sponsor is unable to run the project successfully, bank or financing organization has the equal rights to take over the project and run it up until the project is completion and the loan is paid back. There are 6 or 7 points under the project financing. So you need to be very much thorough on these 6 or 7 points, and appropriately you can write what is necessary here, 3 or 4 points here. If it is a full question, you can write 4 or 5. It's a half question, you have to write 3 different. But here I must say it's not sufficient, because it's suggested. You can write some more, even the part 2. Even the part 1, you can give example. Take it from the part 2. Example, it's the 8 point, I must say. You know, take what is comfortable to you, and then write or prepare your answer. Right, any questions on this? Anything not clear? ඒක තේරෙන්නේ නැති මොකක් හරි තියෙනවද? නැත්නම් is it clear? Andrew, Praveen, Samindri, is it clear now?
Clear, sir.
Andrew?
Clear, sir.
Is it clear, Andrew?
It's clear.
Okay,
Sir.
and Samindri? A bit of raining here, so I'm wondering whether that my voice is adequate to you. I'll try my best to, speak up, but if you do have anything, please let me know, right? Okay. We'll move to the next one. Explain brief role of lending in an economy and importance of banking and financial institutions. Very general question. If you remember, correct, what is the importance of lending, importance of SME, importance of micro, importance of development finance, importance of microfinancing, right? So general answer is asking. So maybe the first one you can reproduce here, right? Most important part of the economy describes as a transaction between the lender and borrower, in which the borrower promises to pay back the money in the future along with the interest. So that it describes what is credit, the importance of the credit in a part of an economy. So increase in spending, thereby increase in income levels in the economy. This in turn leads to the higher GDP and thereby faster productivity growth. If credit is used to purchase productive resources, help economic growth and adds to income. Further leads to creation of debt cycles. Third one, bank financials are majorly impacted by credit growth in an economy. This is because their primary base is to provide loans to the customers in return to interest payments. As an economic environment improves, the customer are more willing to spend, demand for credit grows. These are advantages for banks as it leads to more loans being provided and in an increase in interest income. Right. Now see, here again, the importance of credit we have discussed about. So it basically supports the GDP, economic growth and economic development, creation of jobs, and support the income distribution, balance of payments, promotes exports and poverty alleviation. And there are so many things you can write. Specifically also you can mention the financial institution do a job of financial intermediation, where get the money from deposit from somebody and give it to the credit, right? So by lending, so what we can do is we can get more margin while supporting to the economy, and also we can service the depositors. Our financial intermediation role also would be very much feasible with this credit function available, because otherwise what happens is we have to get the money as a deposit and you have to invest in government or relevant secured organization and get a return to service the depositors. But since we have a credit function out there, so we can provide credit and we can earn some higher margin while making a profit and servicing our depositors. Capital financial institutions benefit. And also by undertaking credit, we can promote investment, we can promote economic growth, and we can promote regional development, and also we can support sectoral growth, and so many things that you can include here. Other than what they have mentioned 3 points, I think you can add another 3 or 4 points also, right? That's what it's a general question, but these questions could be anytime possible. Then අවුරුදු දෙක තුනකට කලින් දුන්නා කියලා මේ කායි නොදී ඉන්නේ නැහැ. මේකම ආපහු අපිට දෙන්න තියෙන chance එකක් වැඩි. Okay, so have a very good answer, like these are very okay answers, but further add more things that what we just discussed. Then mandated lending. And what's a major objective? So there are some targeted sectors, mandated sectors, mandatory lending. So what is that and what's the major objectives? Central bank in a country declares a minimum percentage contribution of different sectors that the loan book or bank should consist of. This minimum requirement is identified as a mandatory lending. Like in Sri Lanka, we have agri sector mandatory lending. So 10% of the bank's loan book should be towards agri sector. So what the mandated mandatory lending is, the central bank can anytime can come and ask the operating license banks or licensed commercial and specialized banks to maintain a minimum exposure towards a given sector. Mandated lending. So what's the objectives is, there are some areas, there are some sectors the government might have identified as growth sectors or targeted sectors or sectors that we need the additional support. So to increase participation towards those sectors, this mandated lending objectives are working. Number two, there may be diversification of your portfolio. Rather than you engage in, say, high net worth lending, corporate banking lending, or retail banking lending, so central bank wanted the banks to finance some other sectors which have not very much attractive if they are not involved, by way of diversification. So diversification is good for us. One thing is, every loans, every portfolio not in the identified sector and different sectors, and also by diversifying, there is an advantage for sectors also, because that sectors could give the input to the next level, other sectors. Third one, additional backup for least developed sectors, because there are some sectors need a kind of a financial and other support. By doing so, they get a boost, they gain a backup. So those are the objectives. And mandated lending is the definition for part one. So here, there may be some other objectives also, like maybe if the government thinks about they want to promote the GDP contribution through agri sector in next 2 to 3 years, so they might mandate it, they might focus, they might request it, right? They regulated, they directed banks and non-banks to promote the agricultural activities in the country, because they are in a big target. The vision could be industrial agriculture or maybe agri export. So in order to support that also, you can ask them to lend. So like that, there may be some objectives as well as a mandated lending, because this is a new thing for us. I mean, the first time, so there are some ins and outs that we have discussed in the lessons, but here it's something new. But again, this is a good thing. Could be repeated in another occasion. So have it an idea. Major concerns, mandated lending. What's the course of action you propose banks to address such? So this could be a major concern. Why the major concern? Because central bank comes and asks, do this, do that. So probably we might not have enough branches, enough resources, enough infrastructure, so many things. But there may be concerns. If central bank is asking us to do, what are those? Every bank cannot adhere to the lending policy percentages specified sector due to their market segment. Example, if you take HSBC, Citibank, Standard Chartered, they operate highly on retail segment. But when you ask them to do, they don't have even branches in agri areas. So every bank cannot adhere due to their target market, so their operating model. Then qualified employees may not be there, because they are qualified at transactional banking. They are good at infrastructure financing. They are good at export import, but they are not good at agri. So the lack of
employees, lack of experts. Setting up a new business vision will damage the brand name earned during the years. That is also possible. Right? Then you say HSBC, Citibank and all that, they are operating in a different direction, different vision. And then they want to change into the agri-sector lending. So probably it could be an impact on the existing customer, their brand name. So that's another kind of a concern. Right. These are the kind of remedial action what they could do. Part B. Assigning uniform proportion for every bank will not be implemented successfully and targeted vision will be unattainable. So that's basically the part one. Request to allocate reasonable time period to set up new divisions in the bank for specialized areas. So that's what we can do. Because in order government to fulfill their target on the mandated lending, so we can give some time frame to these organizations, the banks, to adjust the particular direction. That's one. Divide lending portfolio by the government among banks, taking the consideration of specialized areas, customer segments of the bank, more percentage what they are specialized for. Like that's another one, where maybe HSBC you can say 2% of their portfolio, whereas Cargill's bank or whereas some other bank you can give 15% because they are predominantly agri bank. But overall, you try to make 10% of the banking book to the agri sector because it's win-win proposition. Instead, Cargill's to talk about transaction to retail more infrastructure, you can form the agri bank. So they more focus, more branches on that, specialize. And also, you might request the banks to recruit and train some of the staff to that segment also. Not immediately, but over a period of time, yes. Or there may be, you can ask some banks to open up branches in the agri-related area, and the central bank can give some concessions in terms of break-even, in terms of paying taxes, like that. So you can give some concessions, right? So because the HSBC, probably they wanted to do some agri, but they don't have a branch. Probably Anuradhapura, Ponnaru, Dambula, they can open up a branch and they can focus some of these agri activities. Not immediately, but over a period of time. So for that, there may be some support and some period you can allow them. Okay. So basically, we discussed two questions, one micro, one project financing. I think you may get a kind of a fair idea about what the type of question that the examiner would give us, what the type of answers as suggested answers, and what kind of value additions that we could give here. So next week also we will continue with the rest of the questions, and probably by end of the next week we may have a further idea on what type of questions and how should our preparations would be. And beyond that, then we start off project financing concepts like working capital financing, financial statement analysis, break-even, and financial tools. There are so many things to learn. So I presume that we will do, it's good that we do some more questions next week also, and then we move to the next level. What do you think? Will it be okay? Or are we to do some questions later at the end of the session? Any thoughts? And we continue another week of questioning and then go for the project financing. How do you think? Praveen, what do you think? Is it okay to do another set of questions or continue this and move to the next area? Or
if you keep on other questions, it will be useful for us.
Okay, so then we will attempt some SME related and all that to cover the first 4 areas, and then we'll move to the project financing. But I think that's also good because hope that you have got some idea on preparation, attempting questions. I think that's what I wanted to bring upfront at the outset, because rather than we attempt the past paper question at the end of the session means but right now we try to change our direction, change our plans. If you do any questions, let me know as well about how to do better presentation, better understanding, examination structure, question structure, answer plan, like that. So you can ask those things if it's not comfortable. So during the next week, right? So what we'll do is then we will do another set of questions relevant to section 1 to 4 during next week, and thereafter we'll start to working capital financing and those areas which is relevant to the project financing in detail, right? So then I'm planning to wind up for today's session. Thank you very much for joining me today, and wish you all a very blessed and safe week ahead. So we'll meet next week as usual time. Right, Samindri, basically that there may be so many things you could come, but I just mentioned, but later I will share the exact points, whatever, but just for you for the kind of a draft version. In case of a microfinancing, it could be definition, it could be objectives and target market, it could be maybe importance of the microfinancing to the banking, GDP and economy, and microfinancing models, and concerns, issues in the microfinancing, challenges in the microfinancing, institutions engaged in the microfinancing, Microfinancing Act, areas under the Act, and the functions of the Microfinancing Act. This could be the 8 areas, but you can add maybe another 1 or 2 depending on the past papers and the the rest of the questions that we are planning to do. Okay, so thank you very much again. Then we'll meet next week as usual. So have a good time. Okay, take care. Okay.